In this video, I'll be showing exactly how much dividend income I've earned this August, as well as how I've covered another one of my essential outgoings with totally passive tax-free income. I invest spare money each month into primarily reliable dividend paying stocks, then sit back and watch as my dividend income grows slowly but surely. My first major investing goal is to cover all of my essential monthly outgoings with reliable passive income. I believe that doing so will provide me with a great sense of financial security. I could in theory lose my job at that point.
You're fired.
And still carry on being able to cover the basics such as rent, bills, food, etc., which is obviously reassuring to know. So without any further ado, let's get into the numbers. As always, the information in this video is not meant as financial advice. I'm only sharing my own experiences. If you want to know the company's ticker symbol, it's shown in the top left. Bottom left is a snapshot of the company's dividend payment history taken from divmax.com. The total amount I have invested in each company is shown here at the bottom right. Each dividend will be revealed in ascending order. First off, it's Unilever, which paid me £7 this month. I believe Unilever to be somewhat of a staple in many dividend investors' portfolios, and there's good reason for this. Unilever owns over 400 brands, many of which are household names and enjoy strong customer loyalty, such as Dove, Ben & Jerry's, Hellmann's and Magnum to name a few. In addition to this, Unilever is a truly global company, selling products in 190 countries, which obviously makes it less susceptible to the economic downturn of any one country in particular. Couple this with the fact that Unilever is in the consumer staples sector makes it one of the most solid companies you can own in my opinion. Unilever currently has a respectable dividend of 3.6% and a long history of reliable payments. Unilever pay their dividend out quarterly. Next up, it's Tritax Big Box in the real estate sector, which is one of the more recent additions to my portfolio. Tritax rent out commercial warehouse space to some of the biggest names around, such as Amazon and Tesco. As the number of online sales continue to grow year after year, so too will the demand for storage. This should put Tritax in a favourable position over the medium to long term. Tritax pay out an attractive dividend of 5.2% quarterly. Although Tritax doesn't have a long history of dividend payments, they have paid out reliably with steady growth since the inception of the dividend in 2014. And just like with Unilever, Tritax paid me £7 this August. My final dividend payment in August was for £39 from National Grid in the energy sector. National Grid is deeply integrated within the energy infrastructure of the United Kingdom, to the point it could be described as a monopoly. This results in consistent and reliable earnings. The electrical infrastructure must maintain uninterrupted operation, and currently there is virtually no competition for National Grid within the UK, and this does not look set to change anytime soon. National Grid offer an index-beating dividend of 5.7% and a very solid and long history of reliable payments. In fact, National Grid has not only paid out but also raised its dividend every year for at least the last 23 years. This chart keeps track of my actual dividend income each month. It's a little choppy in nature because the dividends I receive vary significantly from one month to the next. However, if you remove the outliers, you can see that the general trend is rising nicely, which is nice to see. In order to measure dividend income growth more accurately, I like to also keep track of the average too. I calculate the average by taking my total expected yearly dividend income and dividing it by 12. As you can see on the chart, my dividend income is currently increasing in a linear fashion by about £4 each month. However, assuming that I continue to add around £1,000 per month, this growth should start to accelerate as the snowball effect begins to work its magic. This is because I reinvest 100% of my dividend income each month to purchase more dividend producing shares. Although I've not been investing for very long, I already have an average of £40 going into my account each month that I did not have to add myself. Each month this amount increases, even though the amount I personally add does not change. Eventually, I'll reach a point where my dividend income will not just equal, but actually surpass the amount I put in each month. I find this very motivating, and it's one of the main reasons I got into dividend investing to begin with. This month also marks my fourth monthly essential outgoing being covered by totally passive income. Crossing off these outgoings one by one is so rewarding to me. It definitely helps to keep me on track and know that this whole process is in fact inching me closer and closer to financial freedom. These are the actual dividend returns I get on each stock that I own and may differ from the amount you'd get if you purchased today. This is known as yield on cost, and it's dependent on the average price you paid for the stock. You can increase your yield on cost by purchasing more shares at a lower price and therefore reducing your cost basis if you get the chance. In addition to this, any increase in the dividend amount paid out will of course also bump up your yield on cost. The total dividend yield on cost across my portfolio is still sitting at 4.7%. Here's a look at October's ExDividend dates. If you want to purchase shares in any of these companies, then be sure to do it before the dates listed here if you want to be entitled to the dividend. If you're interested in starting your own portfolio, then check out this playlist to see my own journey from day one and get an idea of how things play out over time with regular monthly contributions. As always, thanks for watching.